Picture this. It's 2024, and REITs are outperforming stocks. Impossible, you say? Not quite. Let's take a moment to dive into the recent happenings in the world of real estate investment trusts, or REITs. In the past month, REIT share prices have seen a 10% drop, a valuation plunge that hasn't been witnessed since the financial crisis. This fall in prices has led the market to perceive REITs as being more susceptible to interest rate fluctuations than regular stocks. But is this really the case, or could we be witnessing a case of market inefficiency? Interestingly, REITs are characteristically different from regular companies in their approach to debt. They typically use less of it and have longer debt maturities. This makes them less vulnerable to sudden fluctuations in interest rates, providing them a certain level of resilience in times of financial uncertainty. But what about inflation, you might ask? Well, contrary to popular belief, REITs can actually benefit from inflation. This is because inflation often leads to higher rent prices, which in turn increases the cash flows for REITs. This explains why, despite the drop in share prices, REITs have seen their cash flows and dividend payments continue to rise. Historically, REITs have performed well during periods of rising interest rates. This time, however, they have taken a hit. Dividend-paying stocks have been heavily impacted as their investor base, which is primarily income-focused, has reallocated capital into bonds. Growth stocks, on the other hand, haven't experienced the same sell-off. So where does this leave us? REITs are now heavily underpriced compared to the overpriced growth stocks. This discrepancy between the price and intrinsic value of REITs presents a unique opportunity for investors. With strong fundamentals and low valuations, the stage is set for REITs to make a comeback. Now, the stage is set for a unique investment opportunity, as REITs are trading at low valuations despite strong fundamentals. So we've established that REITs have potential, but how do they stack against stocks, particularly in 2024? Let's start with the advantages of investing in REITs. One of the most appealing aspects is the potential for high dividends. REITs are required to distribute at least 90% of their taxable income to shareholders annually, which can translate into attractive dividend yields. Furthermore, they are known to benefit from inflation. As prices rise, so do rental incomes, and consequently, the dividends paid to investors. Lastly, the possibility of capital appreciation. If the properties within a REIT's portfolio increase in value, so does the value of the REIT, and by extension, the price of its shares. But every rose has its thorns, right? So what are the cons of investing in REITs? One major concern is their sensitivity to interest rates. REITs often use debt to finance property purchases. When interest rates rise, the cost of borrowing increases, which can eat into profits. Next, we must consider the impact of economic downturns on rental income. If businesses struggle or individuals lose their jobs, they may not be able to pay their rent, reducing a REIT's income. Lastly, the potential complexity of REIT structures can be a barrier. Some REITs invest in mortgages rather than physical properties, which introduces a whole new level of risk and complexity. Now let's shift gears to stocks. The pros. Stocks have historically provided substantial long-term returns and can be an excellent way to build wealth over time. Furthermore, they offer a high degree of flexibility, as they can be bought and sold easily on stock exchanges. The cons? Stocks can be volatile, with prices fluctuating based on a host of factors, from corporate earnings reports to geopolitical events. And just like REITs, they are also sensitive to economic downturns. Indeed, the choice between REITs and stocks isn't black and white. It's a matter of understanding the risks and rewards of each investment. Let's gaze into the crystal ball and explore the potential of REITs in 2024. As we've discussed, REITs are currently underpriced and have strong fundamentals, making them an attractive investment option. Moreover, their resilience in the face of inflation and their ability to generate steady cash flows and dividends, even when share prices drop, is noteworthy. Looking forward, these characteristics could play a major role in their performance in 2024. Inflation trends and interest rates are significant factors to consider. If inflation remains high and interest rates rise, REITs, with their inflation-beating characteristics, could outperform other stocks. Moreover, the overall economic environment will also influence REITs' performance. For instance, the real estate market's recovery from the effects of the pandemic could boost REITs, as seen in the case of Emirates REIT's restructuring efforts to strengthen its balance sheet. While the future is never certain, one thing is clear. REITs offer a compelling investment opportunity that may just outshine stocks in 2024. Now that we've dissected the potential of REITs in 2024, it's time for you to make your move. The information we've just unpacked offers a unique perspective on the opportunities that may lie ahead. Yet it's crucial to remember that investing is not a guarantee, but a calculated risk. The future of REITs appears promising, particularly when compared to some overpriced growth stocks. However, the recent events concerning Emirates REIT remind us of the importance of understanding a company's operations and governance before investing. The world of investing is a dynamic one, and it's vital to stay informed. With REITs seemingly underpriced, there might be an opportunity to capitalize on market inefficiencies. But remember, it's always important to do your own research and consult with a financial advisor before making any investment decisions. So, whether you're an experienced investor or just starting out, consider the unique potential REITs may offer in 2024. As you venture into your investment journey, remember the words of Warren Buffett: risk comes from not knowing what you're doing. So arm yourself with knowledge and make informed decisions. Before you go, don't forget to subscribe to our channel and leave a comment below. We'd love to hear your thoughts on REITs versus stocks in 2024. Until next time, keep your investments diversified and your returns high.